Good morning, everybody. Finally got a bearish bar. And let's continue. You can see here the momentum continued to come to a crawl, slowing. Uh, Highs getting closer together in the area of resistance. And on the bond auction, interest rates ripped higher and markets fell sharply to support. So while it's a big red bar, really wasn't a big deal, but it's a start. That's the way it is. It's a start. Now, it's a good start to the size of the red bar. And so back to the factory work. We want to see it the close stay in the lower half, ideally in the lower third. And with the bond market closed today, it may just set up as a 1, 2, 3 where it just chops around in here. If it goes down, maybe it tags the 50 MA and bounce back up, give or take. So there's numbers at 10 o'clock, consumer sentiment. It could move the market. Um, what the bond market closed, less so probably because, about interest rates. But, as far as the Fed, you know, the chairman had made some comments, kind of, I didn't hear him what he said, but kind of like maybe flipping a little bit from what he had said after the last meeting, and the markets rattled around a little bit. And but from the Fed's point of view and fighting the inflation, consumers getting a little more, I don't know, less happy, let's say, you know, with what's happening. I don't know who's happy with what's happening, but they keep spending money. Credit card debt is through the roof. So all of that is going to come home to roost at some point. And, the way things are going out there in the world, I don't think it's going to get much better. But so we'll see what unfolds in the coming weeks. So we got a red bar, and just going back to the charts, big retracement, unfilled gaps that may or may not get filled just based on the depth of this retracement. I would say this one absolutely should not get filled. Obviously, something's very wrong for prices to retrace that far. Any time prices retrace 100% or more, that the prior move has been negated. Just like this one. Well, this one was coming down to support, and I thought, looking at the weekly chart, it might come down a little bit more, down here to those bottoming tail bars right there. And it didn't get there, and it just rips 100% up here. So common sense says, while this created a void below, unfilled gap, no congestion, however, it shouldn't come all the way back down here. So I would suspect this unfilled gap would get filled. I don't know what's going to drive it today, but maybe it will. You see the markets are up here and gapping up about a third of the way up into that red bar. Not unusual, but rallying against that bar. Where will it stop? Well, just eyeballing this, it's beyond this minor resistance a little bit. You can see where the cursor is on the 5-minute chart, the lower right. And if I bring it up to where it is right now, looking at the hourly chart, and you can see the 15-minute chart, there is a void there because of the way it fell. So this is when, interest rates spiked higher. The markets spiked lower, a little rally, and then down it went again. And so it's above these pivots on the 15-minute. And, getting up here, I suppose, maybe, but this is where your congestion area is around, 435, 6 or so. Well, 6. 6.25. That's where your main congestion is. Looking to the left. And you can see it almost got to the bottom of it. And so mark that area off just to see where that may get. The Qs, where are they? About the same distance into the red bar. And at that pivot high on the 15-minute chart. So not much of a, a normal retracement up in there. And so we just move this here like so. Somewhere in there, give or take. It's where the resistance is. You can see on the hourly chart. And maybe the way, if things were to work out kind of in a textbook way, this upside shakeout, and it would do something like that. And again, today being Friday, bond market closed, maybe that's about as far as it gets today. But, we shall see if that plays out. And all right, SPX, let's see where that is at. If any changes, probably haven't changed very much. But with these narrowing days, the range contracted from about, day-to-day range contracted from about 50 or so points to about 38 points. So now it's here, right, just where the spiders were. Now it's here, right on the red bar, give or take. So from yesterday's close, if it was to move from yesterday's close, 38 points would put it at the top of yesterday's range. And for it to get up there, most times would be a stretch, because after a red bar like that, you typically get a narrow range bar or a bar that stays in the lower half. So for it to rally all the way back up to that red bar would possibly be negating it. Now, getting up there, it could turn into a topping tail. And while, we always say, is the bar done? How long do you have to go before the bar to be done? So if it's a 5-minute chart and you got 3 minutes to go, you better think twice about triggering a trade based on a bar that's got 3 minutes to go. And the same thing if this was to rally up here and it's 10 o'clock, well, you got a whole day for it to hold on to those gains, which would be a big move, or whether it rolls back over. So 4,400 is the top strike. Is last I looked where the premium was. It's a little bit less now. So 43.95-ish. But if it moves back up at the open, 4,400, the ideal scenario would be above 4,400, but there isn't enough premium there. But anyway, this is a big strike. It's got the biggest open interest expiring today. So that's an important level. And it's got the biggest open interest expiring next month, which I mentioned a couple of times this week in puts and calls. Big sticking point. So unlikely to get through there, and just based on yesterday's price action, unlikely to even get there. So that would be the best strike. To do a credit spread, and down below, it could hit that, of course. The unfilled gap, it's where it is. So more higher probability that it could get down there today after a red bar, but I'm thinking maybe it won't. I guess we'll see. But the top one, I would say it's not going to get there. Sold off yesterday simultaneously with 10-year because of, correct. That's what happened yesterday. Actually, the comment was, from what I read, I mean, I don't know that much about bond auctions. Of course, I know what it is and what's happening, but the word was, as far as who didn't show up, almost 25% of the issue had to be taken by the market makers or dealers. Not good. Nobody wanted it, or very few wanted it. Country's got a crazy amount of debt. Now you got politicians jawboning again. How are they going to take care of it? They better do something. maybe for real this time, but we'll see what they're going to do. They'll come up with their magic things that are going to happen in 10 years from now. Such BS. So red bar in the transports there, them rolling, beginning to roll over against a giant move higher. Same story. So we've got relatively large red bars reversal, but we got humongous green bars on the weekly time frames. So in this case, this is in a downtrend still. Big move up, the same story. It should stay in the upper half of the green bar. Now, if we go and look at the Russell and how that came down, remember yesterday I was saying, well, it's in the unfilled gap. This is where maybe it could start to make a turn, but the bond market took care of that not happening. You can see it was here and down it went, and now there's the next unfilled gap. So as we look at different markets, and with the thought of, hey, big weekly reversal bar, well, this one, right, well, where is it here? It's right at the bottom there. This one, maybe headed for the gap, and it's Friday, maybe going deep into that green bar there. So not a good sign from the bullish point of view of that move up that occurred last week. So as looking at maybe financials today, you see regionals, and a lot of them are down at a place where they should try and make a turn. And so you can see it gapping up on the 5-minute chart a little bit. So from the bullish point of view, right, well, anything that's down this far and has rallied this much, and where this is here, what you'd want to see is this begin to stabilize, or you'd want to see a stabilization day today in regional banks. So we'll see if that occurs in those banking stocks. Oil. And get bought in December. Robert, everything gets bought in December. So I don't really remember whether small caps were bought more than anything else. Small caps could get bought more than anything else because they've been killed more than anything else. I heard a commentator on Fox News yesterday say, or showing a chart showing that, and maybe this is a contrarian piece of information. He was saying that there have been more call options being bought or bullish bets being made on small caps than I don't know how many years in historical data he was looking at, but it was huge. So, whether it's institutions, however they're doing it, option traders, there is a vast amount of bullish sentiment for small caps right now that they're going to advance. And we've looked at the long-term charts in the past, and it mentioned that they are down at the bottom of this trading range, and so with that thought in mind, and you see this was a new closing low and it popped back up, and you see nothing below here. So look, when we talk about retracements from, as I just explained, I'm not going to go over it again, but this was 100% retracement all the way back down, right? Greater than 100%. So if we take that same thought process and say, well, that's bearish, but it had a giant bar up, which is, maybe it's that being bearish, maybe it's going to rally back up again. But if it stays in the lower half of here, let's say we get into the middle of December, and this is down here, that opens up the door to that big green bar being ignored and opening up the door to this void below. So look, our analysis never stops. So what the information we have right now is suggesting or supportive of a bias that this move was powerful. It shouldn't retrace all the way back down again. especially in the other markets. This should begin to stabilize. Regional banks should begin to stabilize in this area, and we should start seeing some backing and filling. And what we may see going into next week, based, if interest rates go up, and we had this discussion last week, I believe, I know we did in the chat room, about interest rates possibly coming up here toward the 20 MA. And so, look, and this forming a head and shoulders. So we get a short-term correction. We had that big move up in equity markets. Interest rates come up a bit more. Markets go down. Right? This rolls over to come back down again. And if that plays out, this comes down maybe to the 50 MA, starts rattling around in here, and that's where we get the continuation rally into the end of the year. It's a thought based on what I just explained. Now we'll see what plays out. So in these pre-market reviews, I provide thoughts. We look at multiple time frames, and in MT Live, we use different concepts. And so that is a thought process based on multiple time frames and the moves that have occurred, which have been kind of crazy, and taking into consideration interest rates and intermarket analysis. And now we'll see what happens. So as of today, probably going to be rattling around, maybe a little, downside action. You see where the cues are here and yada, yada. So that's where it is. So a lot of moving around. Bitcoin moving up again. And I'm going to hand it over to Dan inside of yesterday's range. Just, that's been on fire lately. And so we'll see what today brings to us. And then we'll regroup. Right? All yours, Dan.
Good morning. Happy 0DTE Friday. We got a bunch of earnings at the usual suspects. I mean, we actually reversed this morning. When I woke up, the markets were down. And then I went to the gym, came back, and they're all up, which I can see on the chart. And so my immediate thought when they're up is that's good, because then, we went over it, provided we don't close more than 50% into yesterday's range, we're going to have bear 1, 2, 3s all over the place for Monday. Asking about A-Rock. Yeah, beautiful buy setup. Hey, Sam, remember you gave me a couple buy setups yesterday? And like always, even though I'm not talking to you directly or indirectly, it's a good example for other people in the room. That is a controlled retracement and nice gap bullish turn on minor support. That is a textbook buy setup right there. So that, Raul, is fantastic. I'm just going to set an alarm.
Yeah, and probably not looking at it in TC, but it's an oil and gas stock. So with oil being down, it's showed relative strength also.
All right, excellent point. I'm going to put this in a window. Looks great. I'm going to set an alarm too. And let's see. You're also asking about, and whenever we look at a chart, we throw out many subjects. So here's another concept: multiple time frame alignment. That's a bull 1, 2, 3, and it kind of looks like all-time highs. So that's a fantastic setup, bro. And let's see, pack here. Asking about sell setup, sure. Yep, sell setup in a downtrend. I mean, what a beautiful bearish consolidation breakdown this was, followed by 1, 2, 3, followed by bearish price action. I just personally don't like shorting stocks under $8. I had an alarm go off on H row, And I said cover a third pre-market. This was a beautiful 1, 2, 3 that IG gave us the other day. Multiple time frame in agreement, relative weakness, gap and down. So that looks fantastic. And let's look at gappers here. There's a lot of, yesterday going through earnings, I was shocked how many stocks that look like they're in death trends, and low price ones too. I mean, look at Plug. I made the comment a number of times yesterday that if this XYZ doesn't gap up, man, it is in trouble. Look at the Joe Biden Green Deal here. How many millions of subsidies has this company gotten? It's a charging station. And look at it gapping down to 386 now. That is nasty. But I went through here and I deleted a bunch already. PBR. Let's see, this is a buy setup, but after a deeper tracement. So I'm just going to delete you. Here's another nasty gap, bouncing a little bit here, down to $22. Sound. I have an up alarm, I think at $1.85. This one was trading along with AI. Remember when AI stocks were ripping over here? Now it looks like the excitement has come back to earth. TTD, this was the only earnings trade. Well, I gave two. And this is a nasty gap against us. We sold what's called a short strangle. We sold out of the money. What was it? $90 calls. I'm in it too. So $95 calls we shorted, and then we shorted the 62 puts. So that's a nasty gap. I can't sugarcoat it. So it's against us, but we said we would take assignment. Good news here that it's at least getting some bottom fishers up to the low. And if I wasn't in it, I have this saying when we used to have these labs and around the country. I said you need the one example of objectivity is being able to view the position charts as if you're not in the trade. Okay. So on this one, I would have this on my list of excessive gap. Let's see what happens at the open to sell a 0 DTE put spread. So wow, this is weird. We sold the 8 DTE yesterday because they did not have zeros or ones, and now they do. So this is on my list to sell a 0 DTE put. Archer opening flat. There's a lot of these setups I also found that are breakouts from bottoming patterns with little buy setups with bullish weeklies. This is one of them. So I think I have an alarm at 540. Bottom right, I sent them a telegram already. Polex is one. Look, it's a nasty downtrend. But you got a big retracement, and I got a gap over this red bar, and I got a 1, 2, 3 on the weekly. So that's a bullish gap. That's in the bottom right. Indy in the middle right, similar. It's gapping 562. Not as excited about this one. That would be a fantastic selling $5 puts if they have them. NVIDIA call spread. Definitely, Thomas. If it's 0 DTE, 10-minute low, definitely. A win getting whacked here. That's ugly. Look at that's a downtrend. Remember we had a MT live recently teaching 8-year-old little Johnny about how to identify trends and trend breaks, higher pivot highs, higher pivot lows, slowing momentum, breakout failure, lower low, lower high. That's in a downtrend. So poor Win's not having a good day. Here's a buy setup. I can't tell where it's opening, but I have an alarm, I think at 21.55. That's another nice buy setup. It did 80% retracement, and this is the first pullback and reversal at 20 MA, but it has to take out a prior bars higher. So that's a nice buy setup. I got an alarm already. Yep. ACB, I think I was one that said if this doesn't gap up, it's in trouble. It is a pretty good gap up. Well, let's see if we can take out 30-minute high. No Baroom, no pattern. There's our Indy docs. That's a bullish gap. I'm going to put this in a window. This would be a great one for put spread. Hopefully, even 0 DTE would be the best. That's a very bullish gap. Now this, I set an alarm yesterday even at 29.70 because this is another beautiful pattern. Bottoming pattern, breakdown failure. If it can get above yesterday's high, that looks fantastic as a breakout of a bottoming pattern. Here's another one. See, I've been seeing these all over the place. Deep retracement, buy setup, gapping over a red bar, bullish weekly. So I'm seeing these everywhere. So watch this on a pullback. A-Rock. Okay, there's Raul. There's yours, A-Rock. Gapping up. Let's watch that on a pullback into the gap. NSC alarm. We did a call spread yesterday, but I had an early alarm like always. Let me reset it. But this is that's actually on my short list too under yesterday's low. So like I said, we just did a call spread yesterday. Why did my alarm just go off? So I think it's 65.10. We're in this. It's kind of just dead money, not doing anything. All right, spiders 180 reversal on a 5-minute chart. So one of you mentioned a video. If you'll go through the checklist for me, please tell me what you see. Our Massey we bought yesterday, half lot, that gapped up alarm, looks great.